Hey, what's up, guys? Welcome back to um the YouTube channel. Me flipping $100 to whatever amount in a year. So I made a mistake, guys. So I thought my Monday. I live in Hawaii, but I thought my Monday would start on the first. I mean, the trading day would start on the first, but my trading day started um on Sunday. So Monday is supposed to be on Tuesday, Tuesday is supposed to be on Wednesday, and Wednesday is supposed to be on Thursday. And um to it today um is Friday's trade, which is Thursday, and I don't know how to put it over here and shift it. So yeah, that's my mistake. But yeah, today has is a break even day. Um, but we was positive 54 cents today. Um, so but first let me explain what strategy I'm using for for this challenge. So it's ICC, but um, Cramson's Capital's way of using ICC. So ICC is trades by Psy, which is he goes from high, higher high, higher low, higher high, higher low, and it creates a um oh shoots let me do it this way. So higher high, higher low, higher high, higher low, and it creates a, a POI over here, um, point of interest. So once it reaches that point of interest, so it closes under that point of interest and it reaches above that, yeah, above that point of interest, um this becomes the draw on liquidity. Yeah, this becomes the draw on liquidity. um Draw on liquidity meaning the market must move to that to fill in the orders and such like that. So um, that's how that's how s- Trades by Sai um, does his analysis. But um, in the 1 hour or 4 hour chart, it doesn't really. I don't really see how the market moves, if that makes sense, because for me Sai is a really he's a genius at reading the market. I've been watching him for, yeah. um so Cramson's way of um trading ICC is candle continuation theory way, which he goes from daily. Yeah, well, he goes from daily. So there's a pre. He goes by. He goes from daily. Um, so this is the first day and then the second day, um, it needs to close above that, um, the previous candle, and then on the current day, I mean, once it goes above that previous candle, that's um, the key level, the point of interest. So on the third day, which is the day that we should be trading, um, you go down to a 15 minute. The 15 minute needs to get accepted under that POI, right? Under that POI, and this, let's say, this becomes the theory candle, and then once it closes under that again, this becomes that theory candle, a new theory candle, and then if the next candle closes above the theory candle and closes above that point of interest, the POI, this becomes the draw on liquidity, if that makes sense. This is the draw on the liquidity, the previous high. So on the lower time frame, it's gonna look like higher high, higher low, higher high, higher low. And then you go down, and then um, higher high, if that makes sense. So sorry, I'm trying to explain it um, how I understand it. So your trade would be, you would be placing your trade here, like that, and yeah, something like that. He usually go for more than um a 1-to-1, or more than a 1-to-1 risk to reward ratio. Is usually like 1-to-2 or 1-to-3 or more. Yeah, that's how he explains his version of ICC, um, which he does it with um, candle theory, continuation theory, CCT. So yeah, that's what I'm gonna use for this challenge within a year. Um, so yeah, let's get into the Friday trade, not the Thursday. Let's get into the Friday trade. So I took three trades today, and um was break even, but we gained 54 cents. All right. And so I took USD CHF, made an entry, and took us out within 15 minutes. It took us out. We lost $3.69. We gained $12.06 because I saw an entry on the 1 hour. And I went down to, it's like a scalping, but yeah, I just tried it out. I know I'm not supposed to um like trade outside the strategy, but I traded inside the strategy on the scalping way, you know what I mean? So I look at the 1 hour, and then my entry was on the 1 minute. And Euro JPY, yeah, Cramson gave us the pairs to trade, and I went off of um the pairs that he told us to trade. So it Euro JPY was playing out, but because the day was about to end, um, I looked back at my phone and saw negative $2.68, so I just closed it. Yeah, and the day it was like 15 minutes till closing. Market was closing, so I just closed it. So let's look at the let's look at the charts. So the lesson is stick to the pairs that Cramson told us to use. Yeah. So let's look at the chart. So let's go to Euro JPY first. So Euro JPY, yeah, it's a wrong pair, but we'll still take a look at it. So, like I said, this is his way of trading. So on the daily, this is the first candle, and this candle, this black candle, broke past that first candle, which creates a new POI, right? And now we were on the trading day right here. So let's zoom in. Yeah, I don't have a mouse at the moment. I'm in bed. So yeah, this is what I mean by the theory candle. It it has to get accepted inside the POI. So once it got accepted inside the POI, this is where I start marking up the theory candle, right? So this got accepted, it just peaked a little. This got accepted, and then if you do we see another candle that breaks that? Yep, it broke that by this bullish candle right here. If you don't see it right there. So we delete this and mark this as our new theory candle, right? So does it get broken again? Yes. And that's what I marked, this. And once it breaks the theory candle, and it broke past the POI, this is when I took the trade, and stop loss was under. And yeah, I figured that because it's gonna be the end of the day, um, it's gonna go down to a 50 Fibonacci level. So 50 Fibonacci level, but it did not. It just went down a little, and then started to go back up. So I don't know where I stopped. Maybe I probably stopped like around over here. Yeah, maybe this, because 15 minutes before market close. Yeah, and that's when I lost the that's when I lost some of the money, $2 something, on this trade. And on the USD CHF, Swiss franc, so let's look at the daily. All right, it gave us a POI, right? Gave us a POI right here. So this was the first day, the second day, right? This was the first day, and then the second day went past that day. So it creates, let's see, it it creates a new POI, point of interest. Then we go down to a 15-minute, right? That's it. Where are we? Oh yeah, this was the 1 hour. So we go down to a 15-minute. Oh yeah, this is I seen this. So um so the 15-minute got tapped, right? I really wasn't watching this market, but 15-minute got tapped, and I figured to place um my stop loss under here. You see? Yeah, right there. Figured to place my stop loss there, and I traded here because the market was already down over here when I saw this trade. But when I took it, I shouldn't have taken it because it was making a massive push back down, and yeah, it stopped me out in like 15 minutes right here. It stopped me out. And on the second entry that I saw, because I noticed that it was starting to push back up, it created a inverted FVG right there. It inverted. I don't know if you can see that. Yeah. Right there. I don't know if you can see that inverted FVG. It inverted that, and I saw this. Where's the 1 hour? Oh, wait, no. Yeah, I saw this on the 15-minute inverted, and then I looked. It made a big push up, right? Once it made a big push up, I started marking my POIs. So this was the POI. This Notice this is scalping, right? POI right here, because this candle broke above these candles, right? That's one POI. This is a second POI, and this is the third POI right here that it broke above. So I checked the 1 minute. Yeah, I checked the 1 minute, and the trade was already playing out. See, the first POI got got first POI went up, and then it retraced back down, and then it went up again, and then that's when I started taking the trade again, and it went up. Yeah, it went up our way, even though it's like it was consolidating. It went up our way, and my target was the recent high of the day. Yeah, yeah. I was getting what you call that. This is not how Cramson trade. I was getting off track, and thankfully it worked in my favor. But um, you're not supposed to trade like that. All right, let's learn from my lesson, and um, you're supposed to be trading if it's on a day. You go down to 15 minute, and 1 hour you go down to 1 minute, and you take the 1 hour take profit, not the day take profit. You get what I'm saying? But I felt like it was still gonna go up this um this draw on liquidity because made it made a push up, and um it broke this previous candle. So yeah, that's about the trade that we took for today, and we was break even, 54 cents. We're still down $13.29, but you know how trading is. We just gotta keep going and improving um, while we're trading. So yeah, keep on going, keep on moving. Um, yeah, this is a long term. We're like I said, this is a year worth. It's gonna be a year worth um, of video of documenting me trying to use this new strategy, because prior to this strategy I was using supply and demand from monthly, weekly to daily to all the way down to 4 hour, and my um, entry was 15 minute. um, I felt like I really didn't wanna wait too long for a trade to play out. Like sometimes I wait a week, sometimes I wait like 3 weeks or a month for the trade to play. So this way, um, I get to trade every single day, and actually watch the market, how the market goes and stuff like that. So yeah, I'm still learning how to trade Cramson's capital way of ICC. He named it CCT, candle continuation theory. And yeah, hope you guys like the video, um, and subscribe. Thank you.